Hi everyone, welcome to Eco Learning Classes. This is Professor Geeta Mahesh. Dear students, let us discuss business economics, which you can discuss in BCom, BBA, and even it is a syllabus for foundation course for CA. Dear students, before we take up discussion on business economics, first let us know what is economics. The word economics is derived from Greek word or Greek letter oikonomia. What do you mean by that? It is nothing but a household. That means economics deals with an art of household management. Till 19th century, economics was known as political economy. An inquiry into the nature and causes of wealth of nation, which was published in 1776, and it is popularly known as the Wealth of Nations. And it is the great work of Adam Smith, and it is considered as the first modern work of economics. Dear students, before we discuss economics in detail, let us understand economics with a simple example. You can see here you have a birthday and you got a gift from your mother, and that gift is 1000 rupees. When you get as a gift, you are free to spend that money as you like. Now what you are going to do with that money? So you have many options, like you can give a party to your friends and you can spend money on them, or you can buy yourself a dress for 1000 rupees, or you can go for a movie and eat in a restaurant of your choice. And there is one more choice for you. You can buy books for yourself and save the rest of money. Now with 1000 rupees, you can do so many things like this. There are four options in front of you. Now with 1000 rupees, you cannot fulfill all these four options what you have. Either you can choose first option, second option, third or fourth. Now what you are going to do? You are going to make a choice. That is what we are going to discuss in economics. How you are going to use your limited income in satisfying your unlimited wants. Dear students, as you have 1000 rupees, you cannot satisfy all of them at a time. So if your mother have given 2000 rupees, you might be able to satisfy few more of your desires. But now she has not given 2000 rupees, you have only 1000 rupees. So you will be in the dilemma, which one you like to choose, which one you like to satisfy. So in that situation, you have to make a choice out of available options. You have to choose any one combination as you have limited income. And moreover, that income can be used for alternative. That means you can satisfy the first option, second option, third or fourth option with the same 1000 rupees. Now you are going to choose that option which gives you a greatest satisfaction, enjoying with the friends, or buying a costly dress, or buying a book, or going to movie. You are going to decide which one will give more satisfaction to you, and on that combination you are going to spend your income. This is what we are going to discuss in economics. So, like you, every individual, every society, every country in this world will have same problem. A person may be rich or poor. A country may be a rich or poor. Does not matter. But its desires compared to the resources you own is limited. A country, it may be a rich, but it does not have enough resources to buy the whole world. You can consider Ambani may be a rich person, but he may not have that much resources to buy the whole world. Therefore, we choose to satisfy only some of our wants, leaving many other wants unsatisfied. So, dear students, you should remember every individual, every society, every country in this world will have same problem. They have to face a same problem, that is satisfying unlimited wants with a limited resources. So these two fundamental facts are the subject matter of economics. What are the two facts which form the subject matter of economics? Human beings have unlimited wants, and the means to satisfy these unlimited wants are relatively scarce. Dear students, thus economics will deal with the allocation of resources. Which type of resources? Scarce resources to satisfy competing unlimited wants in the society. That means how human beings are going to use their scarce resources to satisfy their unlimited wants. And moreover, we will be discussing how available resources will be efficiently used to produce those goods and services which have highest value. That means which are very essential for human being. See, initially when you have resources, suddenly we won't go and buy luxurious items. First we will buy necessaries, then comforts, then luxuries. That means most useful and most necessary goods will be purchased when we have limited resources. If there is a left out, resources are left out, then we go for comforts. But still there are resources are available so that we can purchase luxurious, then only we will buy luxurious items. So in this way you are going to allocate the resources in an efficient manner. Economics studies how we all together work in transferring our scarce resources to produce goods and services which gives satisfaction and which enable us to satisfy our infinite wants. How we distribute these goods and services among ourselves will be discussed in this economics. Dear students, now whatever we have discussed with respect to definition of economics, it is a narrow concept because here we discuss with respect to scarce resources satisfying our unlimited wants is the domain of modern neoclassical microeconomics analysis. Despite it being correct, but it is incomplete. They have not given a complete information. They brought in our mind that the resources are fixed and the skill, the productive capacity, deciding on what specific kind of goods and services has to be produced, and that has to be distributed among the members of the society. But these two most important concerns of economics are not fully covered by this concept. And they have completely neglected that economy has a capacity to increase the production capacity. The productive capacity of modern economy has grown tremendously. Population, human resources increasing, that means labor force have increased, new source of raw material have been discovered, new and better plants, equipments have been developed, and the capacity of farms, factories, mines have been increased because of new and better plant and equipments. Not only that, the quantity of available productive resources increased. Their quality has also improved substantially. Better education, newly acquired skills have raised the productivity of labor force. and has led to discovery of completely new kind of natural resources. For example, shale gas, that is nothing but a natural gas, alternative greenery source such as solar, wind power, etc. So this shows that the resources are not only limited, or what we say that resources are limited and they can used for alternative purpose, but here they are trying to say that the quality and the quantity of resources can be increased by an economy. Dear students, you have to keep in your mind that the process of growth in production and income is not continuous. There was ups and downs in the growth of production as well as income. During global financial crisis and corona pandemic, the output not only failed to grow but also actually declined sharply. That is because of insufficient demand. The factories, workers, and other productive resources remained idle because of lack of demand. Dear students, thus economics is not just concerned with the allocation of scarce resources for various uses, but it also deals with how to increase the productive capacity of its resources, and as well as it deals with how to increase the factors of production. It also deals with the sharp fluctuations in the rate of utilization of these resources. You know, in day-to-day events or in our day-to-day life, we come across with several economic issues like changes in the price of individual commodities, changes in the general price level like inflation and deflation, or economic prosperity. So there may be a prosperity. Few countries are able to achieve economic growth, few countries are not able to achieve economic growth, and in few countries you can see high standard of living, and in few countries you can see the general poverty or poor standard of living, and some firms are making extraordinary profit while other firms are closing down. Thus, we can consider that the subject matter of economics is not confined to the problem of choice, but we also deal with the other issues. So, these are the matters fundamentally concerned with the economic analysis. Dear students, thus study of economics enable us to develop analytical approach and help us to understanding and analyzing the wide range of economic issues. As economics provides several models, a framework that can be applied in different situations. Economics provides the tools for us to choose the best course of action among different alternative course of actions available. So that means the decision makers can make a best decision when you need to choose the course of action out of so many alternative possibilities. However, you have to remember always that most of the economic problems are complex in nature and they are affected by so many factors or forces, some of which rooted in economics. Some causes are studied in economics, but others are in political setup, social norms, etc. The study of economic cannot ensure that all the problems will be appropriately tackled. But no doubt, it will enable the students to examine the problem in its right prospect and would help him to discover the suitable measures to deal with the same problem. When you are using your limited resources to satisfy your unlimited wants, you have to use your resources in such a way that you should get a maximum satisfaction. When you are going to decide, when you are going to choose, then you are called as a decision maker. Who are decision makers, or what do you mean by decision making? It is a process of selecting appropriate alternative that will provide a most efficient means of attaining a desired end from two or more alternative course of action. Decision making involves evaluation of feasible alternatives, rational judgment based on the information and choice of a particular alternatives which the decision makers finds as most suitable. Take example of a piece of land. Piece of land can be used for producing rice or can be used for producing wheat. By using land for producing rice, you may earn 100 rupees as a profit. If you use the same piece of land for producing wheat, and where you can earn 80 rupees as a profit. So if you are going to use this limited resources to produce rice, then you have to give up the production of wheat. So you are making a right decision of using this resources to maximize your income or profit. So you have taken a right decision. If you are going to use the same piece of land for producing wheat, what you give up will be more than what you gain. Then that is not considered as a right decision. So right decision you are going to take by considering the particular availability of alternatives. On the basis of that, you are going to make a rational decision. So you are going to find a suitable solution for your problem. As explained above, the question of choice arises because our productive resources such as land, labor, capital, organization or management are limited and can be employed for alternative uses. Therefore, more efficient alternatives must be chosen and less efficient alternative must be rejected. So choosing a production of rice is the best or more effective alternative than the production of wheat because it is less efficient alternative compared to production of rice in a given piece of land. Dear students, whom we call as a successful businessman. Successful businessman is a person who takes a right decision in right time or who employs the right person in a right place will be a successful businessman. See, the management of business units generally needs to make a strategic, tackle and operational decisions. The good examples you can see here, should our firm be in this business? The question mark. What they are running the business should be there in that business? You have to decide. That means management has to decide. Should launch a product? And given the high competitive market environment, already there is a highly competitive market, and do you want to launch a product? The firm has to decide. If it is going to launch a product, which technique it has to use to produce the goods and services, whether they have to use labor intensive or capital intensive, or which one will be costing the least, they have to consider, and where to procure a necessary inputs, and they have to decide at what price to have the competitive edges in the market. The firm should make a components, and whether they have to make a components or they have to buy from other firms. What will be the output? How much quantity they have to produce? What should be the optimum output? Whether they need to produce 100 units, 1000 units or 1 lakh, which output will be beneficial for them, where they can maximize their profit, for which quantity they can maximize their profit. All these they have to think, and at what price the firm has to sell those produced product, and How will their product will be placed in the market? Which customer segment should be focused, whether they have to focus middle class, rich people or poor people, they have to decide. And how to improve the customer experience, what type of marketing strategies they have to choose. How much should be the marketing budget? See, marketing means it takes advertisement, selling, discount charges, or commission to the distributor. So many costs will be included with respect to marketing. So the firm has to decide how much budget they have to fix for marketing of the product and how to tackle the risk and uncertainties that will be involved in that particular business. Decision making is not an easy task. Decision making on above as well as the similar issues is not so simple and straightforward. Economic environment in which the firm functions is highly complex and dynamic. Every day there will be a lot of changes in the economy. So in that economy, if firm is going to take a decision, then it becomes very difficult, and moreover the problems will get aggregated. The most of the time decisions are to be taken under the condition of imperfect knowledge and uncertainties. Decision making therefore requires management to equip a proper methodology and appropriate analytical tools and technique. And thus the management to be employed are equipped with a proper methodology, appropriate analytical tools and equipments will be provided by this business economics. With a huge theories and techniques, the business economics will help the decision makers to take a right decision in a right time. To brief the business economics, it integrates economic theory with business practice. Dear students, you know business economics is also known as managerial economics, as economics is an integration of economic theory with the business practice. Economic theories provides you the tools which explains the various concepts such as demand, supply, cost, price, competition, etc. Business economics applies these tools in the process of business decision making. So with the help of demand and supply, price and the cost and the nature of the competition, the business economics will help us to a management or to a businessman to take a right decision. Business economics comprises a part of economic knowledge, logic, theories and analytical tools that are useful for rational business decision making. So it is applied, business economics is applied economics that fills the gap between economic theories and business practice. Dear students, you know business economics is closely connected with the economic theories. Economic theories, you can see two types of economic theory, microeconomic theory and macroeconomic theory. And operational research, statistics, mathematics and theory of decision making. This business or professional business economist must integrate the concepts and methods from all these disciplines in order to understand and analyze the practical managerial problems. So they have to get the concepts and methods from all these disciplines or from all these subjects and try to make use to understand and analyze the practical managerial problems. Business economics is not only valuable for the business decision makers who makes profit. Even it is useful for managers of not for profit organizations such as NGOs, voluntary organizations, etc. Dear students, thus business economics may be defined as use of economic analysis to make a business decision involving the best use of organizations' scarce resources. So here business economics is nothing but use of economic analysis to make a business decision with respect to best use of organizations' scarce resources. Joel Dennell defines business economics in terms of use of economic analysis in the formulation of business policies. Thus, business economics is essentially a component of applied economics. It includes application of selected quantitative techniques such as linear programming, regression analysis, capital budgeting, break-even analysis, and cost analysis. Dear students, in business economics, with respect to the business economics what we are discussing for Chartered Accountant Foundation or BBA or BCom, we will be discussing with respect to microeconomics. In microeconomics, we will be discussing behavior of consumer firms in the competitive and not competitive markets, and this theory will provide a managers with respect to framework of making a key business decisions with respect to allocation of their or firm's scarce resources. Dear students, now we are going to discuss the nature of business economics. See, economics has been broadly divided into two divisions. One is microeconomics, another one is macroeconomics. Before explaining the nature of business economics, it is important to understand distinction between these two. The subject matter of economics can be studied under two approaches. One is microeconomics, another one is macroeconomics. Micro means it deals with a small part of the economy. Macro means it deals with a large part of the economy. So it deals with respect to aggregates, but microeconomics deals with the individuals. It deals with the individuals like individual firm, individual consumer, individual's income, but macroeconomics deals with the macroeconomic variables or aggregates like national income, poverty, unemployment, consumption function, etc. Thus, dear students, microeconomics basically studies the behavior of different individuals or organizations within an economic system. How individuals are going to use their scarce resources in an efficient manner. Here the focus is on small number of or a group of rather than all the units combined. Therefore, it does not explain what is happening in the wider economic environment. Microeconomics mainly focus on product pricing, consumer behavior, factor pricing, then economic conditions of a section of people, then the behavior of firms and location of industry. With respect to macroeconomics, if we consider, it deals with the overall economic phenomena of an economy, or it deals economy as a whole rather than individual parts. Accordingly, in macroeconomics, we study behavior of large economic aggregates such as overall level of output, employment, total consumption, total savings, total investment, exports of a country, imports of a country, foreign investments, how these aggregates shift over time. Analysis overall economic environment in which firm, government and households operates and make a decision. Households, not individual person. Government, it is a public sector, it is belong to or central authority of a country. It should be kept in the mind that economic environment represents the overall effect of innumerable decisions made by millions of different consumers and producers. A few areas that come under macroeconomics are national income, national output, general price level, interest rates, balance of trade, balance of payments, external value of currency, overall levels of savings, that is total savings, total investment, and employment level. Then with respect to rate of economic growth will be discussed in macroeconomics. Macroeconomic analyzes the background of economic conditions in an economy, which will immensely influence individuals' firms' performance as well as its decisions. So whenever individual firms are making a decision, they have to understand the economic conditions that exist in an economy, and this will be provided by macroeconomic analysis. Business firms needs a thorough understanding of macroeconomic environment in which they are functioning. For example, knowledge relating to the inflation rate of interest will be more useful for business economists while they are framing a suitable policies. However, long-run trends in the business world are determined by prevailing macroeconomic factors. Dear students, the nature of business economics. The economic world is extremely complex, as there will be a lot of interdependence among the decisions and activities of economic entities. You know, economic theories are hypothetical and simplistic in character as they are based on assumptions. But by making assumptions, economic theories are formulated. But there will be a gap between the propositions of economic theory and happenings in the real economic world, where the firms need to make decisions. But this business economics enable us to apply our application of economic logic and analytical tools to bridge the gap between theory and practices. Dear students, with the help of the following points, let us describe the nature of business economics or understand the nature of business economics. Business economics is a science. What do you mean by science? It is a systematized body of knowledge which establishes the cause and effect relationship, or which brings a relationship between the cause and effect. Business economics integrates the tools of decision science such as mathematics, statistics, econometrics, economic theories to arrive at appropriate strategies for achieving the goals of business entrepreneurs. It follows scientific methods and empirically tests that validity of the result. So because of this reason, we call business economics as a science. This business economics is based on microeconomics. Business managers is usually concerned about the achievement of predetermined objects of his organization, the long-term survival, profitable functioning of organization. Since business economics is concerned more with the decision-making problems of individual establishment, so it mainly depends on the techniques of microeconomics. Incorporates elements of macro macroeconomic analysis. You know, macroeconomics deals with the general price level, income, employment levels in the economy, government policies with respect to taxation, interest rates, exchange rates, price distribution, wage and regulation of monopolies. All those are macroeconomic study, or it is related to macroeconomics. A firm or individual has to function in an economy. So these are the external factors which are not under the control of individuals. A business manager must take decisions, present as well as future, and these present and future decisions are influenced by these macroeconomic variables, and their decisions mainly based on the external business environment or external factors which brings a change in the business environment. Business economics is also an art, as it involves a practical application of rules and principles for attainment of set of objectives. Next one is use of theory of markets and private enterprises. You know, business economics largely uses theory of markets and private enterprises with respect to allocation of its scarce resources. Pragmatic in approach. See, microeconomic theories are developed by making assumptions, unrealistic assumptions. See, when we discuss law of demand, we say when price increases, demand decreases. When price decreases, demand increases. By making assumption, all other things remaining constant. Why we make other things remain constant? When price increases, if income of an individual also increases, then demand may remain constant, or if income increases more than increase in price, then demand for that particular good may increase. See, when we make assumptions, we are formulating theories by making unrealistic assumptions. But business economics will help us to take a decision in the real world. So in that situation, it becomes a very difficult if we believe only economic theories. So business economics is a pragmatic in its approach, as it deals with the practical problems which firms will face in the real world. Interdisciplinary in nature. Business economics, as it incorporates the tools from other disciplines such as mathematics, operational research, management theory, accounting, marketing, finance, statistics, and econometrics. Next one is business economics is a normative in nature. You know, there are two types of economics. One is positive economics, another one is normative economics. Positive economics is a pure science, as it brings a relationship between the cause and effect, but it does not passes any value judgment, and it deals with what was the state of affairs, not what ought to be, how it should be. It does not talk about how it should be. It explains what was and what is. That's it. So that is why it is known as positive economics, is known as descriptive in nature, as it explains the behavior of individual or society without giving any prescription with respect to desirable otherwise of such behavior. Normative science involves a value judgment. That means it is going to pass a value judgment. It prescribes the nature and suggests that what should be done and what should not be done under given set of circumstances. Business economics is generally normative or prescriptive in nature. It suggests application of economic principles with respect to formulation of policies and decision making, future planning, etc. However, a firm or to establish valid decision rules, they must thoroughly understand their environment. Positive economics believes on facts. It talks of, with respect to economic theories after collecting the facts. So for business economics, it is necessary to combine both the positive normative as well as positive economic theories to make a better policies. Dear students, now let us discuss scope of business economics. The scope of business economics is very wide and it covers almost all the practical problems of a manager or a firm. It has two categories. One is internal issues or operational issues which can be solved with the help of microeconomics. External issues are environmental issues which can be solved with the help of macroeconomics. Now let us discuss both of them one after the other. Microeconomics apply to internal or operational issues. As we know that microeconomics deals with respect to individual firms, so it gives a solution to internal issues or internal problems. What will be the internal problems or internal issues within the firm which is under the control of that particular firm? Then we call it as internal issues. A particular firm can solve that problem individually. Such type of issues we call it as internal problems. That means a firm can control or the management can control those type of problems or issues which falls within the management uh, premises. So examples for internal problems, you can see what should be the size of business with respect to taking a decision with respect to product, the technology that they have to use, the factor combination, whether they have to employ more of labor or capital, with respect to pricing of the product, whether they have to keep more margin on a product as a profit or less, or they want to increase more sales promotion, and with respect to financing, and where to make an investment. Inventories are necessary to maintain. If necessary, how much they have to maintain. All these are the good examples for internal operational issues, and this can be studied or solved with the help of microeconomics. Dear students, microeconomic theories deals with respect to demand analysis and forecasting. Demand analysis and forecasting is very important for any firm or any individual when he is going to take up his business, because demand analysis pertains to the behavior of consumer in the market. See, demand for any commodity, let us take a demand for X commodity is a function of price of X commodity, price of relative commodity, income of the consumer, and taste and preference of the consumer. All these things are very essential, and with respect to demand analysis you can understand with respect to the determinants of demand, what makes consumers to change his demand or his preference can be understood under demand analysis. See, it explains, that is, the demand analysis explains us that demand changes due to change in the price of the commodity, consumers' income, and even the price of relative commodities, taste and preference of the consumer, etc. And when you are going to forecast, that means guessing the demand for your product in the future is very essential. That is predicting the future demand. Demand analysis help us to, or it provides a technique to predict the future demand for goods and services on the basis of past behavior of factors which affects the demand. With the help of demand analysis, if you are able to forecast properly, those people who are able to guess the future demand for their product, and if they are able to produce and enable to supply the required quantity at a right time, then we can say is the successful businessman. So forecasting the future and planning your business presently or currently is very important, because you have to arrange well in advance with respect to various factors of production like raw material, labor, machines, equipment, buildings which you need to purchase, and you have to start production for fulfilling the future demand. So those persons who are able to predict the future for their product, demand for their product, then definitely we can say is a successful businessman. And this business economics will provide a manner which manager with the scientific tools which assist him to forecast the demand for his firm in a proper manner. Dear students, business economics deals with the production analysis and cost analysis. Production theories such as law of variable proportion and law of returns to scale, which explains the relationship between input and output. If you consider law of variable proportion, explains input-output relationship in the short run. And if you consider law of returns to scale, it explains the relationship between input and output in the long run. And this production analysis will be helpful for a businessman or manager to choose the optimal size of the output. And even production analysis enable the firm to choose or decide on the choice of appropriate technology, and they use that technology which reduces the cost of production, or it select the least cost input. Take example of labor and capital. If capital is cheaper, then it employs more of capital and less of labor in order to reduce the cost of production. Like that, it is going to mix labor and capital in order to reduce the cost of production. Even cost analysis enable the firm to observe the behavior of the cost when there is changes in the variables such as output period or time period and size of the plant, etc. Take example of short run. In the short run, output can be increased by changing only variable factor, and they cannot change fixed factors. So factors of production are of two types. One is variable factor, another fixed factor, especially in the short run. If you want to increase the output, you can change only variable factor, and you cannot change a fixed factor because the time period is so short. You cannot change all the factors of production. By varying only variable production, to some extent you can increase the output. You cannot increase or change according to change in the demand in the market. Next one is business economics also deals with the inventory management. What is inventory? Inventories is nothing but a maintenance of physical stock of goods which help us to maintain our business in progress. So there will be a smooth continuation of our business. We need to maintain inventory. And that too you have to maintain this inventory at a minimum cost. That means you have to maintain the physical stock of raw material or semi-finished products or finished goods in order to proceed your business without any disturbance. Take example of raw material. If we have sufficient raw material and if a lorry owners go for a strike for a week, and in that week without any disturbance you can continue your production activities if you have sufficient stock of raw material. So for smooth functioning of your business you have to maintain a stock of raw material, semi-finished product and even the finished products. One thing. The second thing is that you have to maintain this physical stock at a minimum cost. Okay, inventory policies affects the profitability of a firm. If there is no inventory and demand for your product is increasing and you are not able to supply in time, then the new firm will enter and they are going to supply, means you are going to lose your customers. And you have to keep these type of things in your mind while you are making the decisions with respect to inventory management. Economist uses methods like ABC analysis, mathematical models, which will help the firm to maintain optimum stock of inventories. Next one is market structure and pricing policies, which we are going to discuss under business economics. Under market structure, you can see there will be a perfect competition and imperfect competition, and you will understand the nature and the extent of competition which a firm faces in a given situations. And it determines even the degree of market power, the ability to determine the price of the product. And according to that, it commands and undertake the strategies that has to be followed to manage the market under given competitive conditions. You can see there will be a monopoly market, oligopoly market, duopoly and perfect competition. According to the market situation and even the strength or degree of competition, you can decide the design of the product and even the marketing strategies. Even the price theory explains how to fix the price of the product under different kinds of market. Take example of monopoly. Monopoly, even though single seller is there, he will have uniform price method and even discriminatory price methods. Uniform price for all the consumers, they are going to charge the same price. Under discriminatory, he will charge lower price if he is a poor person. If he is a rich person, he can charge a higher price as he is able to pay high price. So in this, according to the even elasticity, so here you can consider price elasticity of demand. Even the nature of demand will help a monopolist to decide whether he has to charge lower price or higher price. Even business economics is also teach us allocation of resources. See, allocation, rational allocation of resources is very essential, as we know that resources are scarce. Not only scarce, they have alternative uses. With the help of advanced tools such as linear programming, enables the firm to arrive at a best course of action for optimum utilization of available resources. So you should make an optimum utilization of scarce resources to maximize your desire. Even theory of capital and investment, which we are going to discuss under business studies, will help the firm to maximize its profit. Investment decisions are very important, and it is a sensible policy of capital allocation. You have to allocate your capital where you are able to maximize your profit. So theory theories related to capital and investment provides a scientific criteria for the choice of investment projects and assessment of efficiency of capital. So wherever you want, you cannot invest your funds. So for example, if you want to invest your funds in the backward area where there is a lack of infrastructural facilities, no firms will come forward to make investment because it is a highly risky area because of lack of infrastructural facilities. When you provide all infrastructural facilities and it is located in the area where sufficient raw material are available for running your business, definitely firms will make an investment and they feel that here investment may be a profitable. Why foreign direct investment is not undertaken in agricultural sector? Because agricultural sector gambles with the monsoons and they cannot predict the profit in the agricultural sector. So investment in agricultural sector is a risky. So foreign direct investment we cannot see in agricultural sector. Even business economics supports decision making on the allocation of scarce capital among competing users of funds. Next one is profit analysis. Profits are most often uncertain due to changing the price and market conditions. So profit theories will guide the firm to measure and manage the profit under uncertainties also. So it helps, profit analysis will help the firm to manage and measure the profits under conditions of uncertainty. Profit analysis is also immensely useful in the future profit planning. This business economics is also provided tools like risk and uncertainty analysis, or it deals with the risk and uncertainty analysis. Business firms are generally operated under the condition of heavy risk and uncertainties. Analysis of risk and uncertainties will help the firm to or business firm to arriving at efficient decisions and formulating the plans on the basis of past data, current information and future prediction. Macroeconomics is applied to external or environmental issues. Environmental factors have significant influence upon the functioning and performance of the business. What are the major economic factors related? The types of economic system, whether it is a capitalistic economy or it is a socialistic economy, and the stage of business cycle. If we consider the business cycle, so whether there is a prosperity, boom stage or recession or depression, this type of information is very essential. General trends in the national income, whether GDP, the growth rate of gross domestic product is increasing, is there any fluctuation, what is the trend with respect to employment, prices, saving, investment, everything is very essential. A firm will be performing in an economy and the economic environment of any nation or any economy depends on macroeconomics. Even government economic policies with respect to industrial policy, take example of industrial policy resolution of 1958 and 1991, there is a lot of difference. Here 17 industries were completely reserved for government. In 1991 only 2 industries were reserved under public sector, remaining were left or encouraged private people to invest. So this also matters a lot. Even the competition policies, fiscal policies, government expenditure policy, government revenue and government or taxation policy of the government, we call it as fiscal policy of a government. And with respect to foreign trade policy, if they encourage free imports what will be the condition of our producers, and globalization policies, there is no restriction on import and export, what will be the effect on domestic industries. All this matters a lot, and in that particular situations the firm has to take their decisions. Working of central banks, financial sectors, capital market and other regulations are equally important. If money supply decreases, demand for goods and services also decreases. Even if a financial sector increases the rate of interest, or in the capital market if there is a heavy fluctuations, mobilizing capital becomes very difficult for the firms. And the socio-economic organizations like a trade unions may go for strike for rising the wage rates is also a problem. And the procedures and consumer producers and consumers union cooperatives, their action and reaction is also equally important. Socio-political environment is also very important, and they have to consider while they are taking a decision with respect to their firms. Dear students, next chapter, the basic problems of an economy, which is very important. From that chapter, we will be discussing the multiple choice questions MCQ, which is important for CPT or CA Foundation course. Dear students, if you like, please like, share and subscribe to my channel. Thank you so much.